Have you ever heard of Mr. Market? He's a fictional character created by legendary investor Benjamin Graham to help explain the concept of market volatility and irrationality. In this video, I'll share some of the undervalued dividend stocks that I've been buying, as well as some that we've recently sold, all while keeping Mr. Market's unpredictable behavior in mind. What's up, I'm Russ, and before we get started, just a reminder that I'm not a Wall Street wizard, and I'm sharing this information as part of my journey for your fun and entertainment, and everything I'm about to tell you should be taken with a grain of salt. So please don't go out and start buying stocks based solely on what I say. Always remember to do your own research and even consult with a professional. So hang on tight, because we're going to be moving faster than a coked up cheetah on a runaway train. And if you're a creepy creep who likes watching other people, you can see my portfolio over at thedividendtracker.com, where the link is in the description below. Feel free to pop in, snoop around, and be a voyeur if that's the kind of thing you're into. Now, not too long ago, I put together a dividend overlap spreadsheet to visualize any stock overlaps and start to consolidate redundant positions while focusing on standalone ones and keeping better track of higher conviction investments. So while you'll see many sales and a lot that are indeed undervalued, they were mostly all consolidation efforts and I still have exposure. We sold 10 Comcast, ticker CMCSA, at $35.72. That was a gain of 17%. Comcast is about 32% undervalued and has a Simply Safe dividend score of 89. In the bridge, we also sold 11 Clorox, ticker CLX, at $152.75. It was about a 3% loss. We did tax loss harvest on that. Clorox also looks to be about 27% overvalued and has a Simply Safe dividend score of 75. This was one of the OG stocks we had, but was up about 87%. On Archer Daniels Midland, sold 10 shares at $76.50. Archer Daniels is about 30% undervalued. They have a Simply Safe score of 94, and they are a few years away from becoming a dividend king. We sold 10 British American Tobacco, ticker BTI, at $35.80 for a 2% loss, tax loss harvest on those shares as well. This was more of a Altria consolidation fee because I got tired of paying the small American Depository Receipt ADR management fees, but as it stands, they are about 49% undervalued, have a Simply Safe dividend score of 45, and a current yield of 7.50%. We sold 5 shares of MetLife at $58.60 for a 42% gain. MetLife, another insurance company, is about 47% undervalued, and they have a dividend safety score of 79, and Snoopy is their logo. So those were some of the sales, including 2 shares of Target that I sold for a pretty good gain, and another share of Lowe's to get a few extra bucks of dry powder to invest in some other stocks that were pretty far down. Like 3 shares of Boise Cascade, ticker BCC, at $62.91. Gave us $1.80 of PADI, or projected annual dividend income. They look to be about 21% undervalued. They are unrated on Simply Safe dividends, but they have a 49% 5-year CAGR, and they do have some upside. But honestly, as I'm growing and evolving as an investor, some of the commodity companies where their price is tied to that of lumber or steel, they may have issues in the future and they have to lower their prices to stay competitive. So these are companies that I am seriously going to consider if I really do want to be invested in. And if you'd like to follow along as well, hit that subscribe button. Then we bought 13 shares of Nexstar Media, ticker NXST, at $163.21, gave us a total of $70.20 of PADI. Nexstar looks to be about 43% undervalued, a Simply Safe dividend score of 60, which I disagree with, as their $5.40 dividend is only 11% of free cash flow, which is over $31 per share. And Nexstar Media just signed a deal with YouTube TV, so they, in my mind, are bridging that gap between old world broadcasting and new world digital media. And then we bought 11 shares of Prudential, ticker PRU, at $80.82. That gave us $55 of PADI. They do look to be about 41% undervalued. They have a Simply Safe score of 75. Now, insurance companies do look a little bit riskier, but as their CEO Chuck Lowry said, they do have a rock solid balance sheet, so I'm pretty confident in them, and their dividend yield is over 6%, and I am considering exiting Prudential when they get back into the $90 range. And then we bought 5 shares of Algoma Algoma Steel, ticker ASTL, at $7.85. That gave us $1 of patty. They're potentially 72% undervalued. They are unrated by Simply Safe Dividends, but this is a company that's over 100 years old, straight out of Sault Ste. Marie, Canada, and they have a high return on invested capital. They're a good company, but once again, as I'm learning, I'm thinking that commodity plays might not be the best place to be long term. So when I can get a nice little profit out of Algoma Steel, I may very well just be exiting that position. We bought 5 shares of Enterprise Products Partners, ticker EPD, at $24.92. That gave us $9.80 of patty. Looking to be about 27% undervalued. They have a Simply Safe dividend score of 65, and because they are a master limited partnership, they do include that Schedule K1, which can be a little bit of a tax headache. But if you do hold them inside of a tax advantaged account, from my understanding, all of their income under $1,000 will still be tax-free. We maxed out to 100 shares of Toronto Dominion Bank, ticker TD, at $59.49. We added those 15 shares, gave us $42.30 of patty. Looking to be 42% undervalued. They have a Simply Safe score of 80, and they have been paying uninterrupted dividends for 166 years. We bought 15 shares of Ares Capital, ticker ARCC, at $17.55, gave us $28.80 of patty, looking to be about 27% undervalued, with a Simply Safe score of 59. That's pretty good for a business development company, or BDC. They do have an 11% yield. They're over-earning a little bit right now, as they've paid 4 consecutive special dividends, and they have a pretty low earnings payout ratio of only 81%. We weren't done with the BDCs, because we bought 5 more shares of Main Street Capital, ticker MAIN, at $37.25, gave us $13.50 of patty, looking to be about 6% undervalued. Once again, always remember that these valuations are not an exact number. It's the range. It's like knowing that somebody needs to lose weight without knowing exactly how much they weigh. They have a Simply Safe score of 62, and they've been growing that dividend since their IPO. And just like Ares Capital, they have 5 consecutive special dividend payments and an even lower payout ratio of 69%. And then with the money we got from British American Tobacco, we put that into 7 shares of Altria, ticker MO, at $45.29, gave us about $26.32 of patty, looking to be about 25% undervalued. They have a Simply Safe score of 55. That dividend yield is currently over 8.25%. Now, they did go through that debacle with Juul. What a mess. So they're trying round number 2. Here we go again. They bought Enjoy for $2.8 billion. And then we bought 5 shares of Franchise Group, ticker FRG, at $22.66, gave us patty of $12.50. They are about 65% undervalued. They are unrated by Simply Safe. They have an 11% dividend yield, and I think they are a pretty overlooked stock, as they do have a really solid management team that is focused on long-term growth. And then to wrap up this buying extravaganza, we bought 2 more shares of SCHD, everyone's favorite, at $71.15, gave us $5.12 of patty, and that brought our total up to 64 shares, and they are soon to rebalance the portfolio, so we will have some information dropping very soon on that. From everything we sold, that was a loss of $131.26, but from everything we bought, gave us $266.34 for a net gain of $135.08 of projected annual dividend income. So we need to know what your favorite undervalued stock is right there in the comments below. And have you ever wondered what would happen to SCHD if Schwab were to go out of business? Well, in this floating little box next to my head, I answered that. So if you click that, I will tell you all about it there.